Hey, this is BA, and welcome to WD Gann Trading the Forecast, Part 1. And this is February 12th of 2016. But what I want to do with this series is kind of develop it over time. So I'm going to do a couple today and then space them out over time. And so it's a series within these videos that you will be able to progress with time. I don't want to put them all out on one day because it won't give you time to master what's going on. And there's different levels. Like let's say that you have a forecast, but you don't yet understand how WD Gann's price system works. Well, how are you going to trade that? How are you going to make money from just the forecast? And that's what we want to look at today, actually, and stuff to get you started. And then down the road, what we're going to do is come back and build on it and build on it and build on it. So I hope to progress this series to really help out some people out there. Okay. This is my Dow and S&P forecast. I put out a Dow forecast, but it's also an S&P forecast. And the reason for that is they both turn on the same day. So if you forecast one, you're forecasting both of them. Sometimes they turn at the same time, actually, too. But anyway, so what I need you to do, because we're going to go to the charts and take a look at these dates and stuff. What I'm going to do in this video is I'm going to show you a tool that I use in every single trade I take. And we'll call it here the support and resistance line. If you're familiar with WD Gann, you know about him talking about support and resistance and stuff. We're going to develop the support and resistance line. George Baer called it the jiggle line. If you're familiar with the George Baer material, he calls it the jiggle line. Here we're going to call it the support and resistance line. It's a critical tool, and it's really going to help you, especially even if you're in a sideways market. It'll help you understand what the market's doing, and a lot of times why. It's a very simple but critical tool. All right, I'll shut up for now. Go ahead and write these down. Pause it, write them down, get them down. Let's go take a look at the charts. Okay, here we are in the, we've got the S&P, and we've got it for the August and September period. And hopefully you've gotten the dates written down. We started off with a high on August 1, so we're going to go and find that high. There we go. We need the price bar up there, August 1. Okay, July 31. A properly done forecast, A properly done forecast will be 90% accurate to plus or minus one trading day. Okay, that doesn't count weekends. Like if you forecast it for a Friday, it comes in Monday, you can say, well, that's 2 or 3 days away or whatever. That doesn't count. It needs to be, if it's WD Gann grade forecast, it needs to be plus or minus one trading day 90% of the time. Okay. All right, so we got August 1st as a high, and we can see this as a high, a swing high on July 31. Okay, so it said August 8th low, and we got a low August 7th. Okay. I'll explain to you why we're not going to take this one down here in a minute. Okay, from an August 7th low, we go to an August 14th high. Okay, now this is August 14th. This is our forecast date. This is August 17th right here. Okay, which means this is a Friday, this is a Monday. That's allowable. That happens all the time. Weekends can kind of cut off your price action. Okay. Now, I want to talk about this. Technically, this would be a low. For a traditional analyst would say this is a swing low. Okay. Notice, got to grab the wrong line. And you'll understand by the time you finish this video. Notice if I draw the line from this swing high to this swing low, that it cuts these. Okay, I mean, it just cuts them in half. And this one, it cuts in half. Okay, it's almost like this line's not even there. Okay, but when I move this line, this is, by the way, a line. I want to define a support line for you. A support, resistance and support line is drawn between two cycle pivots from W.D. Gann's time cycles. Okay, once again, a support and resistance line, the definition of it is a line drawn between two cycle pivots from W.D. Gann's time cycles. Okay. Now if you look at this, now notice how the price bars respect this. Okay. Only in one case does it cut the line. Okay. Notice this bar hits the line. This bar hits the line. This bar opens on the line. You see that? That's respecting that support and resistance. And what happens is sometimes, like on this date, sometimes they'll open it on the line and it'll be like a rubber band, doing, and stuff. And then they'll open it across the line. It acts as support and goes up. Okay, and then comes back down because price has to be at this point at this time. So the only question is, what is the avenue that it gets there? Okay, and as you can see, this will give you the clues to what this really is. Hopefully, see this here. What if we drew that? What does that look like to you? But we're not going to get into that just now. Some of you know what that is. We're not going to get into that. This is W.D. Gann's support line. Okay, given those parameters, when we go and we use these correct turns, look at this. I mean, this cuts a little bit. This cuts a little bit. These are both high energy days, meaning big bars and stuff. But pretty much it's respecting that line. Respect here. And it kind of crosses it there, but that's a very high energy day. But it does provide support. Here it provides, on this day, it provides resistance. Okay. This line is critical in trading. It really is. Okay. We'll develop this concept more and more because, originally you would think, oh, well, this is just, a silly little line. Okay. Well, no, it's extremely important. And remember, the definition of this is a line drawn between two points of W.D. Gann's time cycles. And why use time cycles? Why use his time cycles? Is because the time cycles allow you to know where price is going before it gets there. The time cycles allow you to know where price is going before it gets there. Okay. The next date we had August 24 low. And we were bang on. Dead on. August 24 was, in fact, the low. Now, look at this bar up here. Now, this is not a swing low. Okay, how do we know that? Well, this is the swing low because we start going higher. Okay, and what we're doing is we're actually going over to this price point. If you notice this, let's take a look at the whole move. I don't know if I can get the right. Yeah. If you notice this, we're going from here up to here, and it does that in one day. So at this point, price is ahead of time. Okay. At this point right here, price is ahead of time because it needs to be at this point, but it's already there. So what does it do? Well, it goes burning through time until price and time connect here, until time's up, and then the move's on, and boom, and you see what happens. Okay. That's a very critical concept because this, for the first time, for many of you, the first time, this is allowing you to get inside and understand the action of price. Okay? Price has to be at this point. Well, on this day, which is after we swing low, on this day, it's already there. Boom. See, that's how come it goes up to there. It's zeroing in. Then after that, it's like, well, I don't have far to go. Boom. It hits that. And a price point is called a pivot, called pivot high or pivot low, and you see what happens. Okay, all right. So the August 24th was good. Okay, and the next one was, and so all this is a bar. Okay, this isn't a swing low. There's no swing there. It's just a lower bar, and the reason why it opened up, as you can see right there above my arrow. hopefully, it opened up on the pretty much right below the line. It goes up to the line, it goes through it a little bit, it hits resistance, and it goes slamming down. That's what caused it to slam down. Okay? Traders thought after it hit resistance here, traders thought that a down move was coming on because they don't have the technical information I'm sharing with you. They thought the move was from here to here. Only we knew that the cycle pivot was due on August 8th. It actually came in August 7th. But only we knew it was due August 8th. Nobody else knew that. So they thought, oh man, here's the down move. And it's not. So it took them all out. It went sideways until this point. Then the swing down happens. So you can see they didn't have the dates. They didn't know. Okay, even if there was some bad news coming out, I'm sure there was. I think there was some sort of currency news at this point. I could be wrong, But even if there was some bad news around, okay, it's not the news that affects the time cycles. The time cycles are set in stone. Okay, price will rubber band around there. It'll try and go down, but it can't. It's got to be at certain points at certain times, and only through the lens of W.D. Gann's time cycles can we get an understanding of what's going on so that we don't get tricked like all these other traders. Okay, let's move on. I'm getting a little long-winded. August 24, swing low. August 28th, we were projecting a high, and we got one August 28th, swing high. So let's draw that up. Notice how, by the way, it kind of bounced off here and kind of goes down, follows it down, and then slams down. But it doesn't really cut the line at all. So that's good. Okay. Now we got the swing up. It does cut the line here. It provides support here and resistance here. Okay, it kept that bar below the line, and then this one comes up because it has to be at that price. When we do cut the line, a lot of times it'll be the day before or after the pivot. It generally won't be in the middle. This is unusual, but it does happen a little bit. But note that every single other bar other than this one is on that line. This is good. This is good. This is good. And, of course, the low. Okay, so here we have to where on this day, the day after the pivot, we cut the line. There was a lot of energy in there, and you can see that the bar was really big. The next day, we kind of ran into resistance here, okay, and we closed on the line because price had to be up here. The next day, we opened up and shot up through it and got up close to price, okay? All right, let's move on. September 4 was a forecast low. Okay, September 4. Now, this is September 1. That's too far out to even be a WD Gann, what is it? Time cycle pivot. Okay, that's just a bar low. And once we put on the line, we may be able to understand why that bar happened that way on that day. Yeah, look at that. Okay. So, it was, well, maybe we move. Aha! Look. September 4 was the low, which would have been here. This is September 8th, the next trading day. That's where the actual low occurred. Now, how do I know that? Why not take the actual low? What I'm interested in is WD Gann's time cycles, because that's going to tell me where price is going eventually. Okay? If I draw it down here even, you'll be able to see this. We kind of cut the bar here. We kind of, we close on the bar here. Okay, and all right. But if I move this up one trading day, look how that looks. We ran into resistance here. We ran into resistance here. In fact, we opened on resistance, which is why price went shearing down. We opened on resistance, why price went shearing down. Here we went up to very close to resistance. We closed on it. Here we opened on resistance and bounced off of it. Okay. Here now price is working its way down because it's got to be at this point at this time. Here we're working its way down. So the actual low of this move is not here. Okay, and remember, this will take you a while to really grasp, but it's critical. And this comes from years of trading. I've been trading 20 years, and this comes from years of practice with this line. I didn't know about the line 20 years ago, but this comes from years of practice with the line. Over probably, probably 600-700 years worth of data I've drawn this line. Okay. So it's the next trading day, swing low, and look at that, and that explains that bar. All we would have had to known is where price was actually going, and we could have pre-drawn this line. You get that? We could have pre-drawn this line. Then, when all the traders would have thought, okay, on this day, because you go, let's see if we can move this over here and get this out of the way. When you go here, okay, that this hasn't happened. If that line is on there, okay, and that's what I do, as I pre-draw the line to the price point that hasn't yet happened in the future. I do that in my own trading. But what's important here is everyone else would have thought, wham, okay, we got another big down move coming. Only people using WD Gann's time cycles with this line would have known in advance that all that happened was we opened on that line, which acted as resistance, and that's why price was shooting down. Okay, why did we come back up? Well, because why didn't that continue down? Because of that. It's just simply resistance. Okay, that's how come, and so price was zeroing in on this point right here. Let me blow this up. This is such a critical mindset. It really is, because without this, there's a lot harder, a lot more difficult road ahead. Okay, price was zeroing in on this point. So when we were down there, we were already past price. It was zeroing in. So it doesn't just go straight across to hit the price point. This bar was price ahead of time. We had more days to kill. WD Gann all over his work says price and time come together. We had more days to kill, okay, more time to kill, so it hovers. Okay, we open up here, we go up to resistance. Here we open on resistance and shoot down a little bit, then go up and close on resistance. Okay, the next day we shoot through resistance because, again, remember I told you the day before, the day after, you generally will break the line. And the reason for that is because it's zeroing in on this point and it's opened above the line. It's really got very little choice but to go through it so that it can be at that point when it gets hit there. And as soon as that point gets hit, price is on its way to its next target. And let's talk about this next target, because this is a confusing one. This is called a box move, and this is really why I put it in this whole area. Okay. Why we're doing these 2 months compared to other months. Our next point says a high on September 10th. Okay. Well, this is clearly the swing high. Oh, sorry. So September 9th is here. I got ahead of myself. So this is September 9 here. So we draw the line up. Okay, it's one trading day off again. Okay, then we go to a low on September 18th, and this is actually why I used this area. Okay, September 18th. Okay, we go to a low. Okay, we go to a low. Now, let's take a look at this area, because I'm sure, being somewhat new to this, you're going, what the hell is going on there? Well, this is called a box move, and this happens, and I'll explain it to you. And this, like I said, this is why I use this 2-month period, is to show you this. First off, did I miss the high? Was the high scheduled for the 10th? Did it come in on the 17th? No. It is the system I use of WD Gann's. It's impossible. It is impossible for me to be 7 days off. It is impossible. It cannot happen. I know for some of you, you're going, what? Yeah, it's impossible. So that's not the high. All right. What happened here is a classic case of price in a sideways range. Okay. So let's see if I can blow this up. Sometimes I don't really like using the blow up feature because it's hard sometimes to get back to the other. Okay. So this kind of helps a little bit. This I call a box move, and the reason is because there's 4 points in here. There's two pivots that are from W.D. Gann's time cycle, and there's two pivots that are false pivots that are not. And I would say, on average, these box moves occur within a stock or commodity once a year. Okay? So anyway, here you have it. It's a box move. Now, look at this. Right off the bat, let's continue on a little bit, and then we'll come back to this as we develop it. This September 18th low, which is exactly when it was predicted, okay? Then the next point is September 22 high, which is right here, okay? And you can see that. Can you see the line already there? Can you see that? Let's draw it in, and you'll see it even better. See that? So on this day, price opened up, it went down, it hit resistance, it hit support, and it bounced off of support. It's like a trampoline. Support and resistance can often act like a trampoline. I mean, it can really bounce. So it goes up and it closes, but it's already starting to come down. There is no up move here because we're already at price. Okay. Then the next move after that is September 30th low. Okay. And this is the 29th down here. We'll take a look at that. We'll come back and take a look at this, but I wanted to develop this area for you. Okay. Now, we'll come back to this bar here. In fact, let's color it. We'll actually give it a different color here so we know to come back to it because we're not exactly done with that bar. So we'll use a caution. Okay. Right in here, this is the move that we're interested in. Why did this occur? Okay. And, well, the size of cycle, I'm going to tell you a little bit of the secrets here. The size of W.D. Gann's swing cycle that I use, there is a smaller cycle that actually accounts for these pivots. Okay. And the smaller cycle pivoted high here, pivoted low here, pivoted high here, and then pivoted low here. Okay. I don't use that cycle because it produces too many turns, and it syncs up with this. So like I said, once a year you'll get what's called a box move. Is there a way to guard against it? Yes, exactly. If you know what causes it. And all that causes it is price had to go from this point. Let's draw this in. Get my handy dandy markers here. Here. Okay. Price had to go from that point to this point. Okay. And as you can see the size of these bars, it could easily do that in one day. In fact, it does it on the day. See, on the day, price is exactly equal with this, and then it shoots down. Okay. So what's happened here is that on the day that this gets hit, price already knows it knows through gravity. W.D. Gann said that stocks and commodities have their own center of gravity like mathematical points of force. Okay, so it, for lack of a better word, knows through gravity it's going to have to be here. So it traverses this in the same day, and you've got what I've told you about. You've got price ahead of time because we're already at the price level. I'll draw that in. We're already at the price level. Okay. And we're already past it, actually. So then we go sideways. And like I said, markets don't normally do that. But we start going sideways here. Okay. Because all we're doing, and you can see that, all we're doing is honing in on that point. That's all that's going on there. For all the complications and stuff, it's honing in on that point. And you can see that. Okay. I'll draw these in for you. And you can see we're honing in on that price point. See that? It's going in there. Then some news comes out. I don't know. This is the Dow, S&P. I don't know what the news was, but something comes out that there was unexpected increase in employment and more people have jobs and the economy's better. Okay, boom, everyone starts buying or covering their shorts or whatever went on here. I don't know. Okay, but then we have to be at this point. So even with all this, we come slamming back down and we hit it here. Okay, you see that? That's exactly what's going on. So how do you guard against that? Well, it's simple. If you have this high and you have WD Gann's price systems that work off the time cycles, you'll have this point in advance. So, it's a lot drawn in there. I can't go back. Okay, but you'll have this point in advance. Okay, so you would know when this goes up. You would have known. You would have been out here because you would have used a stop, but you would have known that it's going to have to come back down, and of course it did. Like I said, this type of move happens once a year, so it's not that bad. But it's the worst of the worst, and it's what gets most traders, and especially those that are following the cycles and stuff. So people that don't follow the cycles get hit with this all the time because they have no idea what's really going on. It's only, and this is the key in this video, it's only between the 2 time cycle points of WD Gann's time cycles that the line can accurately be drawn and used. Okay, meaning you have to know where those points are, and that's why I put out some forecasts to kind of help people, give them a little bit of guidance. Okay, we said we'd come back to this last turn. Look at this. We cut it here. Okay, well that's the day after the pivot. We cut it here. We come back and we cut it here. Is there another place where we can draw this to where there's less cutting? Okay, let me get this color back. Is there a better place? Well, let's test it. Let's see exactly where WD Gann's time cycle came in at. Okay. Bingo. Look at that. Okay. It respects it here. It opens on resistance here, shoots it down like a rubber band. Here it acts as support. It does break it a little bit, but it acts as support. Here it shoots through, but look at the size of the bar. Okay? And then down here, this is a false low because all it did is it opened up, it went up to resistance, and it's zeroing in on this price. It closes right at price. Price gets hit, and then we're on to the next move. You see that? So even though, and this works in my forecast. I said 1 trading day off. This is September 29. So this is 1 trading day off. Okay, so this is valid. But for your purposes, the real price pivot occurred here. Okay? And when this was occurring, you would have known. Look at that. Because this is what you'll see. And I know this because I've used this for years. Okay? Let me take it up here. Okay, this bar's in. Okay, so we know that we're a trader and we know that the high is coming in. We've already got our line drawn. This is what you'll see. Aha! I've got confirmation that everything is good. There's other ways to confirm Gann's price systems before they even happen, but we're not going to get into that. Aha! See that? Boom, man. Dude, if I saw that, I would double up. If I had this set up, I would double up right there. Okay. All right. We opened on the other. We crossed the line, and there's a reason for that. Maybe I'll show you kind of what we'll call bonus information on why that occurs. Okay, we go shooting down. Boom. And I probably would have gotten out on this date. Because the reason is I would have watched it hit support. I would have known when that was coming in, and someone was like, wait a minute, we're below price, so it's time to get out. I probably would have actually did it this day because I trade options in IBM, okay, and in options this day is going to give you a better price going down because it's a lot of energy move. Okay, so you sell once you get below price here. That's a good selling point. But so anyway. That's the use of the line, you see. It's a critical tool, and you're going to see that in upcoming videos. This looks simple, and it is. It's stupid simple, and it is so powerful because no one else out there knows, hardly anyone else out there knows what's going on. The line allows you to know in advance, just like I showed you just a minute ago, exactly what's going on. You'll understand why the price bars are happening the way they are on the way down. Hey, this is BA. Have yourself a great day. Bye-bye.